get the vibe that you're distant. There's something about you that's different. I see it in your eyes. Something isn't right. Tell me again what I'm missing. 'Cause you're fading out. We've been here before. Tell me again, just tell me again, and I'll make it right. Don't go through that door. Tell me again, just tell me again, and I'll make it right. It is a lie when you tell me that nothing is wrong, just leave it be. But I see it in your eyes. Something isn't right. Tell me again what I'm missing. 'Cause you're fading out. We've been here before. Tell me again, just tell me again, and I'll make it right. Don't go through that door. Tell me again, just tell me again, and I'll make it right. I will make it right. I will make it right. Tell me again, just tell me again, and I'll. 'Cause you're fading out. We've been here before. Tell me again, just tell me again, and I'll make it right. Don't go through that door. Tell me again, just tell me again, and I'll make it right. Tell me again. Tell me again.
Rodney, happy Tuesday. How are you?
Fantastic, Andy. How are you doing?
I'm good. Did you have a happy Father's Day?
Man, couldn't be better. I did.
Good.
Had a great
Did
one.
you?
Me and my youngest got to play a little golf together, and then my oldest one was bringing back some of his stuff from UT. So seeing him that night was all good.
Nice. Hey, a technical question. Did you check that checkbox for the shared screen? You
I
did?
did.
Okay, good. So there's been stuff happening in the finance world. Let me click on focus here so we're not bothered. Good. There we go. And we're going to talk about that today. The topic today is builders' confidence is up, and we've got some people out there swearing, pinky swear. I'm pretty sure it's a pinky swear. I feel pretty good about that. Economists are saying that there's near certainty that the housing inflation will soon fall, and what they're saying is that home prices are going to start to drop, and so we'll touch base on all of that stuff. So I just thought that'd be kind of an interesting spread for the show this week.
Yeah, I like it. You're going to have to get me on that. Because when they're talking about, we'll get into it, but the strategy, right, is they call it. What do they call it? They're not calling it. I guess housing inflation
Yeah.
will soon fall, but are they saying that prices are going to go down?
I believe that that's what I'm reading, but more than once you have helped me interpret things differently. So do you see that differently?
Well, I took it like it was some of the call. Well, we can get into it, I guess. Then
Okay, we'll get into So we got this happens more. This happens from time to time, man. I'll see something and Rodney go, boy, I don't. Hey, you've been
No,
drinking.
I'm not. I'm looking for you to help me explain it. I'm looking for your knowledge on this one.
Let me make sure I've got Bing. We got that. Just doing a little house cleaning back here, man. Hey, bear with me. Good. Well, let's. It's how we start every. Wait, that's not right. Sorry.
It is.
Bing.
That's how
There
we
it
start
is.
it.
Here we go. Every time we start, it's with this. Yes. This is live.
And upside down.
For a minute. That's right. It switches. Here we go. Hey, I saw the Philip. Hey, Philip. How are you doing? He's here. Hey, Wendy, Angie. Hi, guys. Hi, Rodney. Sorry.
Oh, it's all good. Glad our regulars can make it today. I'll jump in here. As you can see today, we're 9 basis points down on our mortgage-backed securities. That means if it's red, it's not good. It's but 9 bips is not very much overall. You can see that the U.S. Treasury is going down, which that is typically the case when they both usually are the same color, going the same direction. So, but as you can see today, it was all the way up here, and that's why this is green. Is that we've floated back down to here now? So we is up here, we're back down to here. Looks like it's just trading in the days, but since looks like May, we've had some pretty good gains that I'm excited about, and it looks like it's hopefully just going to continue with this trend. If you go to, say, the last 10 days, it may be too close to see that. Yeah, it's not a very good chart. Go to the last month. You can see we got a lot of green is what we want. Green means our pricing rates are trying to get better. So
Okay.
there you have it.
I say this every week, but when yours goes up, the rates go down, right? It's a reverse thing. Okay, good.
We're talking about how much basically they're paying for a mortgage-backed security, so it's kind of backwards.
Okay, yeah, that's for the life of me. That just
green is good.
that I got is sort of a Christmas thing. Any chance you could tilt that camera down just a little bit, get your head up? Thank you. Oh yeah, look at us. So, all right. I'm so glad to see Angie and Philip and Wendy here. Those guys, what a pleasure. What we're going to talk about today, and we're going to just touch base on something that I brought to Rodney's attention, and it was, I don't actually have notes on this, but the title is Mortgage Points May Help Homebuyers Lower Monthly Costs Amid High Interest Rates, How to Know If the Strategy is Right for You. And I asked Rodney if this is a topic that we could cover, and he's graciously said yes to that. So help me understand how all this works. I mean, because where we're at is houses, and we're going to get into this in a minute, but houses are expensive. Interest is still up there. I didn't look at rates today, the numbers, but I'm betting they're in the 6.9 something. I bet probably.
Yeah, you can. Yeah, I think it's a really good purchase. You can get them close to 6.5 right now. So it's they're trending down a little bit.
Oh, did it go down that much? Well, anyway, okay. So with prices up like that, people are looking for ways to improve their bottom line when they're buying a house, and that's where this article comes in. So talk to me about what this article is talking about.
It's a great topic, actually. I'm surprised that I'm not surprised you come up with all the good ideas, anyways. The mortgage points. I'll give you a little. I'll give you an example, Andy. If we went back 2.5 years, and somebody was to call in here and ask us for a quote for a mortgage loan, right?
Yeah.
Ask them questions, whatever, get the information, send it back, and we would have 9 times out of 10, this office would have sent their customer a quote with zero origination and 0 points. Okay, so no discount points at all a couple years ago. Today, everybody is looking at something with at least one origination.
And for anybody that's checking in doesn't know, what is a discount point?
A discount point is just a charge associated with the rate. Like let's say if we went, on that, if you were buying that mortgage-backed security at 99, but you had to pay 100 for it, then
Right.
you'd have to charge one discount point to get that 5.5 rate, right?
Okay. Okay.
So that's basically what it is. You're just buying down. You're just basically paying. So you're paying basically an upfront charge to get a lower rate, which is points.
Is that is that the same as prepaying interest? Is that kind of what that is?
No, it's I mean, you can kind of term it that way since you're lowering your interest rate, but that's it's kind of
Not what it. Okay.
not prepaying interest. But
Okay.
you can, and I guess what I'm saying in the market is the market has just went to where almost every single person that is looking for a mortgage is looking at 1 point or 1% as an origination fee, where 2 to 3 years ago that was not our market here. And honestly, I think it's came about so it's just a gentler way of dealing with today's interest rate, instead of, because you get a lower interest rate if you have one origination than if you have, say, 0 origination and 0 discount points. If you have one origination and 0 discount points, your rate's going to be lower. So it started out with an origination, but now we're seeing people actually paying points as well. And what that means is that basically what I do is, and they'll say, well, if I wanted to get to this payment, how much does it cost? Or if I want this rate, how much does that cost? And we just look at the cost of what it takes to get there, evaluate how much it saves per month versus how much it costs, and then look at, like, hey, now we got to guess at how long you're going to have this mortgage, right? Because we all understand it's a high rate right now, but is it going to be lowered in 2 years, a year, 3 years, 5 years? So that's what we look at. So kind of look at how much you're paying versus how much it's saving, and are we going to be able to break even anytime soon?
And so when you buy down a loan, that changes the interest rate for the life of the loan, correct?
Correct. Yes. They have those temporary buy downs we've talked about, like the 2.0, 1.0, and they're always said temporary. This is just where you're paying a discount point or whatever it is, maybe a half a point maybe a point and a half. There's different variations of the fee just to get the lowest rate you can.
So the buy down is different. That's a different category. That's a
The
different
temporary
animal
buy down
altogether.
is.
Okay.
And
Says
that's all.
go
That's
ahead.
all you're doing on temporary buy down is you're literally taking the prepaid interest and
Yeah.
sending them that money for the cost of the buy down.
And
That's
then
it.
you're trying to calculate and you're trying to guesstimate at what point you can the rates are going to moderate in the near future in the next 3 to 5 years, right?
Right. Yeah, we're going to look at it and say, this is what you could buy it down to. This is how much you could save and things like that. Typically, right now, what I'm seeing the most of is if the seller is paying the cost. Sometimes that's where the buyers are putting the money, because it's not, most of the time it doesn't look like it's going to be a great investment. So it's the buyers are not using their money typically to do it. They're usually using the money that the sellers are given in closing cost.
And so they just add, okay, all right.
So if it's like say closing cost was $10,000, and that
Yep.
was and the loan amount was $5,000, or $500,000.
Right.
So basically, you'd say, okay, well, if they wanted to pay a point, you could collect $15,000 from the seller, and they'd pay the closing cost and a point. You just like me and you would have that conversation on the back end because the customer's kind of already said, hey, I would like to buy it down or whatever.
Right. Or the buyer walks away essentially, or doesn't submit an offer. And so that's going to be certainly on the front end of our offer, a conversation we're going to have with the listing agent saying, hey,
Right. Yeah.
we're going to need some help on this interest rate. I mean, just tell them that
Yeah.
up front. I hate surprising those. Just
Yeah.
don't surprise the listing agent.
Yeah.
Don't do it, So this is what I'm reading. 45% of conventional primary home borrowers bought mortgage points in 2022 to reduce their mortgage amount, a trend that continued into this year, according to Zillow. Again, their competitors, I don't know that I can't say that I'm plus or minus on Zillow, but one thing they're really good at is data.
Yep.
I'll take their data all day. Them and Redfin both. They're really good at that. But that 45% is up 29% from 21. So you can see the price pressure is leaning on buyers. I bet you that is, I hadn't really thought about that's just a technique that is going to keep a lot of buyers in the game.
Yeah. It doesn't lower it as much as you think it would.
Right.
But I think I think it's more of a mental strategy for the buyer, kind of getting their head wrapped around the new rates, right? So
Right.
if they're at 0.0, say at 6 or 7%, or and then you could get 6.6 with one origination. That looks a lot better, especially if we can get the sellers to pay it.
Yeah. The one example they have in here that really cuts to the chase for me, because I'm kind of a simple guy. It said the loan value is $300, or $300,000. That's a little, so that's pretty low. But that would 1 point, it cost $3,000. So it sounds like 1%. I think you probably said that and I missed it. But that would lower the interest rate just 1/4 point. So
Right.
Is that huge? No.
Right. Yeah. Let me see if I can do a calculation real quick on 300,000, 1/4 point. Let's see here. We could. Let's see here. 1,800 would be the payment. Versus $1,750. Okay, so it's right at $50 right there in that example.
No kidding. So $3
Or,
grand.
hey, how about that for easy math? Yeah. So 3,000 divided
50
by
bucks
50.
costs 3,000. Huh.
So, and then, but you're saving, so 3,000, if you divide that by the $50, that's 60 months, 5 years.
That you basically recover that. You break even, right? Yeah.
Right.
60
So,
months.
that the 60 months part right now is a long time for me, like, because I'm not sure. I'm thinking you might have a good opportunity to refinance this loan within 5 years.
Well, and that's what we're going to get into here. I think so too. I mean, I really do. But I wanted to bring this up because it's really important that people know, and I'm sure that they do, that there are legitimate ways to lessen the blow of getting into a house. And you and I have always talked about buying a house is a long-term strategy. It just is.
Mm-hmm.
It is. But if you can get some help like this, that's great. However, I think the takeaway I'm getting from this is, at least for me, maybe not. I think that this is a fair statement. $3,000 is a lot to spend to gain $50 a month.
Right.
When I do my calculations, I'll spend the 50 and keep the 3.
Yeah. But it's the thing about, let's say that takes that from 7% to 6.75.
Yeah.
I mean, that may be just where the customer has to have it. Like I'm just not buying at 7%. Right.
Right. And sometimes
so,
it can be a mental barrier, and
yeah,
sometimes it can be a numbers thing too, I suspect.
yeah, it's definitely. I think this is way more mental than investment wise, because our whole market has went to this. Like, we just now we tell people, like, hey, if you want to see something without any points, let us know. I mean, our market has went to this,
Huh.
and it's like, if you want to, so we send it out and just say, hey, if you want to see other options, let us know, because this is,
I mean, that's
yeah.
really interesting. Well, thank you for letting me lean into that topic. I think that the way that we can end this particular deal is if somebody's looking to do that, meaning have the seller buy points, you got there's other alternatives that you can consider, and that would be between you and your lender to
Right.
figure out what those are. I don't want to willy-nilly just spout a bunch of stuff, but at least we're starting off with, hey, you got options. And what Rodney is teaching us is this seems to be the standard fare these days.
It's yeah, you can see the numbers on them just rising crazy. It went from 0 to wherever it is now, but yeah, we're pretty much doing it on every single quote we see right now.
Got it. So the next thing I wanted to talk about is bringing affordability. Now it's going to seem like I'm making fun, poking fun. The topic is housing expert, how to bring affordability back into check for the buyers. And this is a good article written by a person that I do respect. And the guy that she's talking to is from Burns Consulting. And Burns Consulting, they're big deals. I mean, these guys really know what they're doing. Did you look into this thing?
Yeah,
Did
I
you
thought it
have
was
any
good.
thoughts?
Yeah, I like I don't want to ruin the whole article, but it sums it up pretty good right off the bat. I like it. Might be my guy. Yeah. But I like their, the take on what the mortgage rates need to do and things like that. That's a good point, because it's easy to say, right? Income, sales price, and interest rates,
Right.
or what drives this factor, right?
Yeah.
So,
And his
but I
whole
like
point, and the whole headline was how to bring affordability back into check. And
Yeah.
it just reminds me of that gag that Steve Martin did years ago, How to Become a Millionaire, right? Remember that? And he says the first thing you do is you get $1 million.
Yeah, that's a good one. Yeah, I should have left my Smokey and the Bandit on in the background. If
You
you're gonna bring up that guy,
Yeah. Here's a good question we're going to touch base with. There we go. Sorry, it took a minute to think. Oh, well. That's you're going to read that,
No.
right?
I can read it. I don't know. I don't know about 3%. I know they're artificially high right now. I think they're definitely going to come back, but
Mhm.
are they going to hang around in the fives forever or touch the fours? I don't know, but I don't see 3. I don't know
You know what
I
the
don't know, Andy.
average is
What
over
would
the
have to happen for us to see 3s again?
You know what the average interest rate for mortgage interest over the past few decades, if you were to average it all out, you know what the average was? And I'm just remembering this from a bit of information I got months ago.
7.5, 8.
7%. That is what it was. Now that doesn't incorporate all this,
Yeah.
zigging and zagging and stuff, but 7% is what the average was over the years. That's just
Yeah, we just spent 20 years below, half of 7. That's the problem.
yeah. And we're all
I mean,
spoiled by. And Angie says, I kind of don't think so. And I have to agree with her that that's probably right. And I think if we remember, if we go back in history just a minute, the reason that we got to 3% wasn't necessarily a good reason. I mean, we got to 3% because everybody was dying, not literally, but financially on the hook when COVID washed through the country and nobody could work and it was just all messed up. And they were trying to keep the economy going, oddly enough. I mean, so that was the biggest reason that those rates had dropped to that,
Right, and they were artificially lower than they should have been because what the Fed was doing, buying all the treasuries and just keeping it down, just like they were. Banks are selling them now,
Yeah.
keeping
Yeah.
ours falsely high. So it's yeah.
You just got to remember that at least I do, that I have to remember the circumstances that brought about that 3%. Because if you just look at that without understanding the surrounding circumstances, it seems like, God, those are the good old days. Well, were they? I'm not so sure. Well, I'm gonna top off this housing expert article, and Rodney already kind of said what it was. This guy's big revelation set to bring affordability back into check is simply you do it one of 3 ways. You either raise income, lower the rates, or lower home prices. That is mind-boggling. That's stunning.
Now,
Wow.
yeah, but the thing was he did with with some CPI good news with our builders confidence. These other 2 factors we have a chance at. The people are making a little bit more money.
They are.
And then the rates are being stubborn right now, but we're coming off we're at the bottom end of it, whatever you want to call it. Not bad. It's not all's lost on that one, but yeah, it's I like at least the guy wrote the article and said exactly what needs to happen. Although it's it's hard to have all that happen, right? I mean,
well, and I don't think you'd have to be a John Burns executive analyst to figure that out. That's my point.
Yes, you don't. But we see a lot of these other. Hey, you could have pulled up one of those articles that somebody with a
let's
pink
zip
top
over to
and
YouTube.
Back hair,
The sky is falling.
Yeah. So at least the guy only used the headlines for the for the article.
Oh, man, that's funny. That was you're really very kind. So do you want to dip into the rate? dip into the rate pause. Let's do that. So something happened last Wednesday, or was it Thursday? Can't remember now. That the Federal Reserve put the rate hike on pause. They stopped for a minute. And this is, in my opinion, huge news. Let me
I
check
agree.
something here. Bear with me. Because here's what I'm getting at, and I actually put a video out on this because I like the topic so much. And what Rodney and I really do try to do is, I'm looking for, there we go. Okay. We're trying to look for the high side, the good news. And here's the bottom line with these guys pausing everything. What was the reason that they paused? Well, it looks like they're stopping long enough to see what effect the last rate hike had, because that's what the experts are concerned about. And we've heard about Jamie Dimon included, I think is included in that group, that said they're concerned that they've overshot the mark on cooling off inflation with the rate hikes, right? I think he's included in that group. But
Diamond's actually wanting another rate hike. He's the opposite. But
is.
I think he secretly wants that so these banks can crash and Chase can just go in there and buy all of them.
And scoop up all the banks. Yeah,
Yeah.
that's a good plan.
But-
That's a good marketing plan. But there's a lot of experts I know that are concerned that, and there's on both sides of the fence. There's a group that's we're going to talk about that in a second, Ange, about the prices. We're going to have a group that wants the rates to go up, like Jamie, I guess, said, and then a group that's concerned about it overdone. But what's happening at this point is that there seems to be enough adjustments being made, changes being made. The CPI has changed to 4%. The inflation rates dropped to 4%. And there's a couple of different kinds. There's ones with and without fuel, and with fuel and all that kind of stuff, and housing. And housing brings a big mark. They want to get to 2. It's already down to 4, and he doesn't want to overshoot the mark and have it drop into a recession. What I'm saying is, and it seems like I'm using an awful freaking lot of words to get there, is they're stopping for a second, taking a beat, and watching what the economy does to make sure they don't overshoot the mark. That's my whole deal.
Yeah.
That's what I'm saying.
Well, I'm glad they slowed down at some point because they did it like 12 times in a row.
12 times in 15 months. Yeah. Mm-hmm.
Yeah. I mean, so they've been jacking it up. So, yeah, it's, and that's always the complaint, right? Is people saying you don't give it enough time for it to work, right? So now they're fine tuning it a little bit, getting it where they want. So,
well, and they're trying to see now. But I mean, when we talk about this, them taking a pause, here's my whole shtick on this particular happening. At the very least, I don't think that this not raising a rate hike, I don't think we're going to necessarily feel it in our wallets big time. I don't think that says we're suddenly going to feel wealthy. But it seems to me that it's a positive occurrence because they're stopping long enough to check it out. And it seems like that things are going the way they want it to go. And that they're not so interested in basically killing off the economy this month, right? All I'm saying is it appears to be good news because they're feeling reasonably positive. The other thing that I would say is, before we start to celebrate too much, and don't mean to make too much of a big deal, but it is positive. And that's my thing, is that I believe that the economy, we talked about this a million times, is driven by psychology. If people are happy, the markets are good. If people are distressed, everything's tanking. In this particular case, isn't it nice we're having some good news? That's what I'm saying.
This right here, I think I'll give you 2 points to this. I think that this and the debt ceiling lift, like to your point, I think the debt ceiling lift and this no hiking this time helped consumer confidence greatly, um, especially in the builder arena where that, when I was putting some thought in, I'm like, why is the builders section doing what it's doing? Why is that movement happen so fast? And I think this has a lot to do with it. Just what you said, Andy. I think that the builders kind of said, hey, we know what we're looking at now. We're probably not seeing, they're probably not raising a bunch on us from our construction loans and stuff now, and things like that. So you're right. I think the stuff like this and that debt ceiling was great news, and it's showed up in our rates.
Yes. And the way they we'll kind of dip into the new construction. We got to remember that the builders should be fairly happy because it's early summer, still early summer, and that's usually when people are out buying houses. This is when we're normally making hay. It's a different year this year.
Right.
But they measure three home marketing indices that posted gains, and those are the current sales conditions rose, the sales expectations in the next 6 months increase. These are all from the builder metrics, and they gauge the traffic of prospective buyers. Because for us in the winter, it slows down. Now, some places that have snowfall and it drops off entirely. But with the builders seeing those three things happen, they've got to be more positive. And one of the things that's helping with that is this positive news for any buyer that's out there. What's going to get them off the fence is good news. It just is,
Exactly. Yes.
It just is. And so for the first time, for the first month in 2 years, that wage growth outpaced the CPI. Now they had it here, consumer price inflation. I suppose that's similar to the consumer price index. I'm seeing that as the same. But to have wage growth outpace the CPI improves the average standard of living. Again, are we going to feel it in our wallet? Not big time, but you're going to surely feel it in my head.
Yeah.
That's two pieces of good news that, like, are we coming out of this thing,
Yeah,
Whatever
and the great news. Think about maybe for us feeling that way, but the reality is that there's going to be more people getting to purchase. That's
Yeah.
the thing is like I'm still concerned about all the people that was on the sidelines for so much time. They're still on the sidelines.
That's true. That's true. And, Philip made a mention here. He thinks politics played a role. I think that's exactly what Rodney was saying about getting the debt ceiling part of that cleared up. I think I'm interpreting that right.
Yeah, well, yeah, politics plays a role in all that stuff. But yeah, the debt ceiling and this the pause in the interest rates hikes from the Fed I was agreeing that it's just created a lot of positive stuff, in our market where people are entering the market. This builder stuff, I think we're fixing to go into, and things like that. So,
And I think something else that's going to start happening is there are a lot of people on the sidelines. I get that. There are. But what they're waiting for is these huge drops in prices and rates. And when that doesn't happen over an extended period of time, people will start to accept the fact that this is kind of the new normal, and that
yeah,
they'll adjust their expectations a little bit.
right. I think there's a huge demand, and I think they're going to be entering the market as the rates creep down. And then, but yeah, if you say the bottom 20% of these people, Andy, don't have are waiting for a price drop or a crash or a 3% again, they're unfortunately they'll probably be renting. for several more years.
Right. Yeah, you're right. Going up, numbers going up. The rates will be raised again because politicians want it even. Okay, you're going to be my interpreter here, Rodney.
Confidence going up, numbers going up, the rates will be raised again. Yeah. Well, see, I think the artificial stuff is flushing itself out. Like the artificial stuff, I'll call it like the builder's sentiment, right? It's getting better, right? The what we just talked about, the Fed pausing. Any good news in the market right now is having a positive reflection in our mortgage rates because it's out of balance where it's at. Meaning it's just like it was artificially low several years ago with what the Fed and everything was doing. The market will right the rate ship out and get us back in line with something appropriate for the market. But I just see, like you're saying, the government's kind of stepping out of it now. They're seeing what they want to see. They're taking off the training wheels, or however you want to call it, and I think this will settle back out into a little bit more reasonable market, right?
Right. And I'm going to bring this in. I like bringing this. I like this stuff.
If your boss can fire you as you take, yeah.
I know. I would.
I'm,
I'd think twice.
I try not to get too much into politics here, but is my red hat back there somewhere? No,
oh God.
Yeah, I mean, who knows, man? It's all politics. I mean, but it's always like this. It's always something.
Well, and now we're right in this election. It's basically an election cycle, and so it's just going to be all kinds of messed up. Anyway, so our standard of living is a little bit better. Thanks for chiming in on that, Philip. I don't know what to do with that.
Philip's baiting us. Philip's politic base. He's not race baiting me. He's politic baiting me because he knows I can't control my comments.
till after we finish the broadcast, then I'm going to get an earful. So, but before we get too happy about the feds and what they're doing, what we believe is that they're stopping, like we said, taking stock and looking and seeing what's going on. But they did signal, and they do that with flowery language, basically. I said, however, the Fed on Wednesday signaled that 2 more increases to the benchmark rate are likely this year as they continue to manage the inflation rate. Now, what's interesting is they're telling us inflation is job one as far as they're concerned, and they'll continue to inflict the interest pain as long as necessary to get that down. That's all it is. But we're seeing also that they're responsive to, number one, is it public opinion to say that people are concerned that they're going to overshoot the mark? Did that go into account for these guys pausing the rate? I'm sure it did. Sure it did. At least I think so, and I'm nobody, but that's what I think on that. So they're just telling us they've got their eye on it, and they're going to do what it takes to get that handled. So,
yeah, I took that as I was kind of hoping that some of these pressures would ease off the rates and we have a better third or fourth quarter, in real estate. But I think announcing that they are saying that, hey, 2 more times before the end of the year, we're gonna make sure, don't plan on a booming fourth quarter is basically the way I'm taking that, is that they're going to keep it in check.
right.
Because I do think it's inflation, but I think it's more. I think they've talked just as much about housing balance as they have inflation. I mean, I don't think the government one bit liked this housing balance that was going on. So I think that's what they're trying to hit, that the overall cost with the CPI, since housing is so much to do with CPI, that I think that's why it's continuing to I think they're really they inflation for sure, because everybody understands inflation, but correcting the housing market may have been more important to them than inflation. But just I don't know if they could ever say that, because not everybody's going to understand what I'm saying, or what that means, I guess.
A lot of times when you're watching the news on this kind of stuff, you can see the stuff kind of trend through and wash through, and what's been coming up a lot, and not just from the clickbaiters, but people that are in the know, like Lawrence Yun. He's an economist with National Associated Realtors, guys like that. But there's been a lot of talk about inventory being so low that's a problem. It's being advertised, this is a problem now, and affordability, that's a problem. I mean, it's really been, they have really made a lot of noise about that. The good news, and then Lawrence, and what do we keep saying about National Association of Realtors? Love them. I'm in that organization, full disclosure, gotta be. But they're going to have a slightly more sparkly view of housing, because that's what they do. They facilitate the sale of homes. That's what they do. So they're going to have a more optimistic view on a lot of this stuff. And so he doesn't agree with the rate increases, the two more with Powell. He's saying that's not necessarily could overshoot the mark. But here's what he did say, and I'll let this topic go. Mortgage rates are more closely tied to the 10-year Treasury bond, which responded this week, meaning last week, to better inflation news with a rate decline to 3.7. That normally means a 30-year mortgage rate is around 5.5 to 5.7. Mm-hmm. Of course, we know mortgage rates have been near 7% recently, but, and this is Yoon, the potential for a decline is real as we progress through the year. He's suggesting that rates could drop as we go through the year.
Right. No, I love that guy.
I do too.
I'll tell you what, they seem to be look at some stuff with rose-colored glasses at times, but they're also extremely accurate with their data.
They really are.
Just because they don't jump on the skies falling headlines, they are still very accurate. I like them too, because they're always, it always fires me up too. It's like, they said this, but.
And the reason that is, for anybody that ever watches this, or anybody else that starts to promote groups like that, they'll think, well, yeah, it's slightly biased. They're trying to sell you something. I'm trying to say that we realize that they're just doing the best they can. And I think that what I have to keep in mind, and Rodney's you've made this point excellently, thank you, is that in terms of inflation, one of the biggest influences on inflation is housing. Well, that's what Lawrence Yun's deal is. He's talking about the largest chunk of influence for inflation. So you bet I'm going to listen to him. And he's usually pretty much close to right, Yeah.
No, so, yes.
Yeah. And there's one more confirmation I'm going to add here, and then we'll move on to the last topic. It says the Fed's, this is of course to June, I think, the Fed's latest decision to hold off on a rate increase in June will ensure that mortgage rates are likely to keep moving sideways for the next couple of months. This is by George Ratu, who used to be with Realtor.com and is now an analyst for Keeping Current Matters. So, and he's a guy like Lawrence Yun that he's one of these really geeky number guys that's usually right on. Anyway, while the Fed short-term rate does not directly impact long-term mortgage rates, higher borrowing costs have trickled through the financial system. 30-year mortgage rate has hovered around 6 to 7, cresting the upper limit several times. So the reason I read all of that was we are doing what Rodney, and you're kind of like got the wizard hat on, you've been predicting all along. We're just dragging along the bottom, meaning we call it the ceiling if you want on this, but we're maintaining a steady strain as we go along on this for now.
Yeah, and that was the only thing I took from the that 2 more rate hike was just saying Rodney, don't get too happy. I'm gonna still control you this year. We're not gonna turn you loose. And that we're definitely not. When you look overall, we're definitely not in the spot we need to be for rates to come back too quickly because inventory is too low. So, with builder sentiment going up, getting, we talked about $500,000 homes. Was that our last show, or is that somewhere else?
Yeah.
So, I know 500,000 across the country is not a lot, but just hopefully these things add up and it puts us in a better position where it's not a crazy market when the thing opens back up and first-time home buyers are just immediately pushed out again.
Yeah, and when we talk about median housing, Rodney and I have a different view living in Williamson County because Franklin's about $800,000 median. Brentwood's like 1.1 million median, but the state of Tennessee is 300. And across the country, I believe that the median home price is like 277 across the country. So we're we have to think in terms of where we live, and that's just the way that is. And then Angie says it's an artificial inflation. You bet it is.
You know it. Angie, she could get her own show. She does Angie's rates. I think she's dead on, I think it's artificially high.
There's
kind of like what that guy was saying. I mean, every other number you look at, we're supposed to be a point or two lower than where we're at.
Yeah. And so the final topic that we've got for today is why economists say it's near a certainty, that's pretty strong language, that housing inflation will soon fall. And here's what it gets at. It's a pretty good article on CNBC if you're looking, Philip. Shelter is the largest component of the consumer price index. We knew that. Category, therefore, has big influence on the direction of overall inflation. We knew that. Housing trends feed through the CPI with a substantial lag. Now, that's what people are concerned about, is because when they take housing data, have you ever seen how the consumer price index is how it's gathered? It's insane. It's like 65,000 different price points for everything from toothpaste to mountain chalets. It's just mind-boggling how much goes into that. And yet, one of the biggest contributors to the index is housing.
Right.
And the way they have to measure that, and here is how they do this. The CPI isn't a particularly accurate gauge for housing because the CPI, Consumer Price Index, doesn't capture those price trends in real time. It operates in a substantial lag, meaning it can take 6 months to a year for a decline or an increase in current housing prices to fully feed through the economic data. And that's how we go sliding down into recession.
Yeah. Because we're 6 months behind. We're sitting here working on,
behind.
We got to fix this now. Yeah, well, it was fixed 6 months ago. We didn't know it.
And and there was, remember we talked about a couple of months ago that one of the ways, this is really, I find it starting to get sweaty. This gets interesting for me. So how do you manage that, the numbers on housing data relative to the CPI? How do you do that? Well, the way they work through that is a thing called owner's equivalent rent. And what that means, because for somebody like me, I lived in my house a long time. I'm unaffected by all these rates and stuff in terms of mortgages. I couldn't care less because I've had the same mortgage for years and will continue to do it exactly. And most people, 60-some% of the people in the country, are in exactly my position where they're paying what they, on a mortgage they got 10 years ago. Who cares? Right. I mean, refinance is probably stopped. I would suspect that's dried up a little bit. But the way they manage this is they take it's a category called owner equivalent rent. And when I bought my house, there would have been a certain, if I were to rent it, there would be a rental number associated with my house in Brentwood, Tennessee.
Right.
And what they do for the CPI is they can reassess that every year or every month as rents go up. And
Yeah.
so that keeps the value of a house relative to the way rents move and how much impact it has on the economy.
Yeah, it's
So
pretty simple way of doing it, but I bet it's pretty accurate too.
it is pretty accurate. And that's why I always wondered why they pay pretty close attention to rental stuff. You'll see Zillow and those guys, they're watching that rental stuff. That what they're doing is they're watching that owner's equivalent rent on, how much. I mean, that's how they figure out how prices are going up, right? Like Case Shiller, the only houses they price are ones that go into their numbers are ones that have sold before and then have sold again. There's no new construction, there's no townhomes, no nothing. It's
Yeah.
just single family, already sold again, Boy, sorry.
Now, let me ask you, let me throw the question I've been waiting for this whole time.
Oh,
They're
God.
saying it's near certain that housing inflation will soon fall.
Yeah.
I can agree with housing inflation. Housing inflation was going up when you're adding in because now they're talking about rents too, right? In this
Well, they're
statistic
taking it into
or
account.
shelter cost.
Yeah.
So if rents are falling, which we knew they had peaked a while back, right? And they were potentially going down or not increasing nearly as much like our home prices were.
Right.
So I'm thinking they're saying that versus our prices are going to necessarily decline. I'm thinking they're saying our houses aren't the inflation on them. It's going to stop growing because of the interest and the rents and things like that. The shelter costs are finally catching up, and we're probably not going to see appreciation, which we're seeing 0.04 or whatever. I mean, it's moderate anyways. It's nothing. You know what I'm saying?
That's nothing. That's not even moderate.
So if they say, will soon fall, I mean, it's already at a good point. It's already dropping, not dropping, but it just stopped going up crazy.
Right.
So, but that's what I'm thinking it's saying. What's your take on that?
It just seems, let me think about that. Their whole point really is it's kind of based on that owner equivalent rent. And what I'm seeing them say is that prices will actually come down on housing. I mean, that's just the way that I read that. The measure partly reflects the amount a homeowner would pay to rent to live in the unit, assuming it was leased instead of owned. And but they're saying things like, bear with me. I know that this is by Mark Zandi. He's the guy that is with Moody Analytics. And I'll read the whole phrase that he gives out here. As the largest expense for an average American household, shelter accounts for more than a third of the CPI weighting, the most of any consumer goods or service. That gives housing an outsized influence on the overall direction of inflation data. Housing inflation has been stubbornly high for months, according to CPI data, but economists think that it has peaked and is on the precipice of a reversal. And this is where Mark Zandi says, I know this with about as high a degree of confidence as one could have, said of falling house inflation being near at hand. So maybe what he's saying is what you're saying, Rodney, is instead of prices coming down, it's just not going to grow as fast.
I think they're saying that. Yeah, for me, I'm taking it like the inflation and the astronomical increase we've had is coming down because he even goes on those who have fixed mortgages or own their homes outright. They don't have a housing payment, and you know, a lot of people are not tied to that market rent, just
Right.
like you. But
I
yeah,
agree with you completely now and that's why I like this live stream that we do, because it allows me to think more deeply about some of these things, because I have to be really careful about these terms. I mean, people will talk about housing and come up with all kinds of numbers, and it'll say new housing versus housing. Well, new housing doesn't mean an old house down the street that's just come on the market. It means
yeah,
new. It means never owned before. That's different. Inflation in this particular term, I think, in this case, is exactly what you're saying, is that the days of the skyrocketing price increases are over. Would that be fair?
yeah. Because I think especially the way you explained it, 6 months. We know rents have leveled off a lot since then
A
over the
lot.
last year, with higher rates that the homeowners are paying. The owners are paying. They can't charge as much for rent, all that stuff.
Right.
But the fact of the matter is, just in my market, our market here, I know I have several people out looking, and it's not the easiest thing in the world to find a house right now. I mean, you can find them, but it's they're not they're not coming back so fast that they're finding them as fast as they want to. Something's either wrong with them, or multiple offers. I mean,
Or they're priced too high. I mean, that's just this
yeah,
go.
I mean,
I mean,
yeah,
that's like somebody listed in my neighborhood. That breaks my heart, but they did, and it's like $70,000 high, and I'm like, geez.
yeah. What's their address, Andy? Maybe I'll shoot them a YouTube. Send them a YouTube video.
No.
List them with a good realtor in their area. What a bozo!
Anyway, so I thought that was really interesting that things are calming down. So if the takeaway for me on today's live stream, and God bless everybody that's joined us on this, I just love your company, is that according to the feds, that seems good news to me. That's just good news. Is it over the moon? No, but it's good news.
Yeah,
We see these guys talking about, it's almost like the price increases are at a hard stop. That's almost what he seems to be saying.
yeah. Well, there's got to be a lot of data coming in helping with that inflation number if it's 6 months behind.
Yep.
From what we've been through, right? What's been going on in the market. So I can agree with him there. I don't know if it's. I highly doubt it's going to translate into lower home prices just because of the inventory levels.
I agree with that as well, because there's one a point in this article. It says housing costs have shot up but have slowed, and even, almost in parentheses, wasn't, but started to fall in some areas. So
Hmm.
that's the exception rather than the rule. For
Right.
any of the places that exploded during COVID, they're taking a hit. San Francisco is a good example.
Yeah.
The places in Texas. But overall, things are, can I say, leveling off? Is that a
Yeah. I
reasonable?
mean, they're getting more balanced every day.
More balanced every day. Well, Rodney, any final thoughts, man?
Man, I don't know. There's a lot of stuff today. No, I like what we're hearing. It's like you said. It's not. We didn't get anything we're gonna have a ticker tape parade over. But even last week, I mean, the debt ceiling. They finally got past that. We got some good news on the rate hikes. Some of these inflation numbers are coming in. Jobs are doing okay. I mean, there's a lot of good stuff going on. That is what we need, these little bit of increment
Yep.
wins,
Yep.
so we can get out of this 6.5%, 7% market.
I agree. I agree 100%. I mean, too much good news in a row. We've seen how we respond to that. That's usually
We ain't had a show like that in years. Too much good news. Yeah.
good. Well, listen, everybody. Wendy, Phil, Angie, thanks a lot for being here with us today. Rodney, thanks for your time, and I will see you next Tuesday if you're going to be around. You're going to be around next
I'm
Tuesday?
around.
All right. Talk to everybody later.
All
See
right,
you.
see
That was
y'all.
fun. Bye.